All right, hey everybody, welcome to Korean Atlanta Mentorship. So here we have another TikToker, the credit card girl, and it says debt payoff and working mom life, 15.1K and 21.9K. So I wonder if that means that she has like two credit cards that are this amount, or maybe this is her progress where she originally had 21.9K and now it's 15.1K. So let's see what's up with her.
This video is for my debt payoff girlies. I was just sitting at my desk at work and literally all I can think about is my debt payoff. Is that how you guys feel? Like, I feel like literally I'm just counting down the seconds so I can make another payment. I'm counting down the seconds so I get paid again so I have more money to put towards my debt. I'm like constantly like, oh, looking around at my desk. Like, I wish I wouldn't have bought that or bought that or bought that because I wouldn't be in so much debt or I'd have more money to put towards my debt. And it is becoming all consuming. Like, my brain 24/7 is thinking about my debt payoff. And I just don't know that that's healthy. Like, yes, I want to be like really invested in it and like spend the time that I need to on it, like make my payments and make sure that I'm like not spending extra money and like doing all those things. But how healthy is it for me to literally be thinking about it all the time that it makes me physically ill?
Uh-oh.
So I'm just here to ask other debt payoff girlies if they feel the same way or if like their life, they have a good balance between their life and their debt payoff. Like, I feel like I'm just the debt payoff girl. I'm like, that's it. And it's like really consuming all of me and I don't really know what to do or how to change that. So I'm coming to y'all for help.
So what happens when you pay off all the debt? Then what are you going to be, right? I don't think you can be the credit card girl anymore unless you focus on how to apply for credit cards, which is actually a topic or genre of video content, right? And it is stressful, especially if you're in a lot of debt, you don't know how to handle it. I mean, it is extremely stressful. And so that's what we're going to do today, pay off debt. And if it's 20K, you always have to wonder the amount of income that's made, right? That's really important, the amount of income. But let's go ahead and pay off debt. And what's the first step that we do is we just create a budget and we pay it off using something called velocity banking. So I think if I were her, right, and I'm not giving anybody financial advice, but I'm just saying hypothetically, in order to control my spending, I would put it on one credit card that purposely had my budget limit. So let's say I have $20,000 of debt, but there's one credit card that has like a $2,000 limit, and I want to make sure that I never really surpass that unless there's an extreme emergency. Then I would just put it on that $2,000 credit card, so my expenses can never exceed my budget for that month. So let's go ahead and get started. Velocity banking, what is it? It's a debt payoff strategy where you throw all of your money into debt to help with something called a line of credit. And so you create your budget. Your budget's your debt attack plan, your income, expenses, leftover checking, savings. And then you list all of your expenses, all of your debts. Make sure your debt, every single line item, or your every debt that you have is its own line item. And then here with your personal expenses that are not tied to debt, that's just going to be its own line item that you can combine, right? So in this case, we make about 50, we make a little bit less than six figures, 5,800 a month after tax. How much is that? 5,800 a month after tax. How much is that? No, that's not right. That's not right. Gross income of 5,800, 5,800. Oh, so it's about a little bit more than 70,000, I think, taking doing cowboy math looking at this. All right, so let's go ahead. So we've done the budget part. Now we just do the velocity banking side. And it's really easy. All you do is copy the income, you copy the expenses. And then here in the checking and savings, we don't list anything. We just put this as a zero, okay? This is just a zero. Because the whole point of this is that we're going to use all of our money to attack debt, and then we're going to use a line of credit to make it really easy so that we use all of our money to attack debt. That's literally all this is. So if you want to like deconstruct what velocity banking is, all it is just quote a marketing term to tell you not to save money if your goal is to pay off debt. Because you could do it one or two ways, right? Or maybe there's more ways, but one way is to save money, right? So that's what Dave Ramsey says, where he says, hey, you got to like save $1,000. Okay, you got to save $1,000 in order for you to, do step one of the baby steps, right? But here we're just skipping that. We're not like saving $1,000. Why? Because if we need money, we just take it out of a line of credit, right? And what's a line of credit? It's basically a financial tool where you can borrow money, pay back, and then use it over and over again. That's basically what a line of credit is. And so we're going to assume we have access to a line of credit. Now, if you know how banks work, right? So you have $185 left over in the month, and you have all this debt. Will they give you a line of credit? The answer to that is no. Because banks don't lend money to people who need it. Because the bank sees a person who needs money as a person who won't pay you back, right? So that's why a bank doesn't lend money to people who need it. People who need money don't pay you back. Okay, and so if you want a more realistic scenario, I have that hidden under a 99-cent paywall where someone actually gave me a real life scenario of 22 debts, and that person only had $4 left over. Okay, $4 left over, and we went through it. And I think when people first saw that live stream, they were like, "This is so beautiful," right? Because most people couldn't, if they had $4 left over, they couldn't figure out what to do to get out of their debt. Now, obviously, this is assuming we have a positive cash flow. Like even like a couple $100 of cash flow is really powerful compared to being like deep in the negative. If you're deep in the negative, I don't, like I said, I don't give any financial legal advice, but that's probably in what you consider to be bankruptcy territory, right? Okay, so now what we're going to do is just move some of our debt into the line of credit, and let's see how much credit card debt that we have. So if you don't know, there's this thing called the cash flow index, and all it is just basically the amount of debt divided by the payment, right? So you get a number, the debt divided by payment. It gives you a ranking system, okay? So this is the ranking system, and you just pay off the lower numbers first because the lower numbers means you get more bang for your buck for paying off the debt, right? So, for example, a lot of people are excited to pay off the mortgage, right? Why? Because if you pay off the mortgage, it's something emotional, it's something personal. But really, if you just think about it in mathematical terms, you're literally giving someone 220,000 to get $927 back your cash flow in your cash flow, and that's what this high number means, right? That's literally what this high number means. Okay, all right. So here we have these low cash flow index numbers. So this credit card, right? This credit card is $30,000, and if I pay this 30,000 off, I get more cash flow than paying this $220,000 off. So that's why we pay these off first, right? And this is $85,000 of credit card debt. And let's assume that we have, I don't know, $100,000, whoopsie, 8% line of credit that we're not going to get because banks don't lend money to people who need it. Remember that. And it's $85,000. And so here we're just simply doing a balance transfer, right? We're just simply doing a balance transfer. And so what happens with the balance transfer is we're moving these credit card debts into that line of credit. And then guess what happens here? Oh my goodness. These 5 credit cards go to 0, and magically we go from 185 to 3,000. Yeah, 185 to 3,000. And then the final step is you put your entire paycheck into the line, expenses out, and then rinse and repeat over and over again, right? So if you want to know how much the payment usually is, it's usually in either an interest only payment or interest plus principal, but it's not going to matter because you're putting your entire paycheck in. So to get the next month's balance, it's previous month's balance interest minus our cash flow, so 3013.1. So hold on, 3013.1. And then what we do is we take the average daily balance, multiply it by the interest rate, and then you divide by 12, right? So if you're putting this 5,800 in and the monthly payments are $556, the interest is actually expense, right? It's actually, if we're technically doing it correct, it should be added to this cash flow number, or subtracted from this cash flow number, but it's all going to be the same because it's calculated anyways. But here we see that as we keep paying off the debt, the interest will lower and the balance will lower too. And then we're just going to copy and paste, right? And so now let's see how long it takes for us to pay off everything. So 32 months, less than 3 years. Okay, well that's good. And then I'm going to do 32 months. And how much are we paying off? We're paying off 85K of debt, right? So let's pay that off. And now we only have two more loans. So we have the auto loan and the mortgage. So luckily we got this loan calculator. And hold on, let's see at month 32 what the current balance of the loan is. And so we see it's about 9,700. Again, use the same cash flow index method, take the lower value, get more bang for your buck. So we're going to move this 9,700 into the line of credit, right? So we'll just do this here. And then just going to be plus 9706.65. And then what we're going to do is this is going to be 0. Okay, and then we now have an updated cash flow. So I think, take a look here, values. So we're going to put an extra $300 into this, 3372.47. Oopsie, I can't even type. 47, 3372, 372. Okay, 3372.47. All right, so now we see that in 35 months, the car is paid off. Woohoo. 35 months. All right, so 35 months, 85 plus 20. That's going to be 105K. All right, and then here now we have the mortgage. So what's the mortgage balance at 35 months? We just put 35 right here. So we see it's 206, right? Oopsie, 206. And at this moment, we have two ways of paying it off, just dumping our entire free cash flow as an extra payment into the loan, or we can use a line of credit. Now, if you have a 3% 30-year loan, you don't want to move the whole thing into a line of credit if you could, right? You're just going to end up paying more than you have to. And I've done so many calculations on this. But if you use something called chunking, it does produce a really good result. However, okay, however, just be aware that the interest rate does matter. Like if you're moving 3 to 8, it doesn't like in no world will that ever beat the will the 8 ever really beat the 3. I mean, if you do a comparison of 0% and a loan and an 8% line of credit, right? Then I've done this before too. Like you'll only end up paying a couple grand over. Like it's really crazy. But anyways, if you want to use it paying a line of credit, then what you do is you just use this calculator that I have access to because I bought real estate education a long time ago. And then you just type in the numbers in and it'll tell you how long it'll take to pay it off. So how much is it right here? 206, 209.16. Let's just say right here, 206, 206, 209.16. And then let me see, what's our income right now? 5,800, right? So 5,800 here, and then we'll just do, oopsie, 5,800 here, 1,500, and then we'll just do a $6,000 chunk, and we'll see that it gets paid off in 4.3 years. All right, so 4.3 years, woohoo! All right, so now, but let me delete this, and so that's going to be 35 divided by 12 plus 4.3. So 7.22 years, and then we are debt free. Woohoo! All right, well, so there's going to be 0. Okay, so now at this time, instead of being the credit card debt payoff girl, I could be the, I don't know what you would be at this moment, but just maybe cash flow girl, right? If I were a girl, but I'm not. Credit card girl. And at this point, your life wouldn't be consumed by debt. But I know how scary it is. And I think a lot of people are in this situation because there's just so many, it's just like an endless amount of content, just endless of people in debt and them being scared, right? All right, well, that's it for today, folks. Korean Lancet Mentorship. See you all in the next video and have a great day. Happy Easter.